Welcome to the Scaringi Law Lunch Break. This is your time of the day to learn a little bit about the law while you enjoy your lunch. As the economy continues to surge forward, many Americans are interested in entering into business or expanding their existing businesses. Some consider whether to start a business from the ground up or purchase an existing one. If you're interested in purchasing an existing business, there are several things you should consider before taking the plunge. First, you have enough capital not only to pay the purchase price for the business, but also to inject sufficient capital into it once it's yours, so that you can be sure you're able to pay its regular and ongoing expenses. Buyers too often will focus more on the amount of the purchase price than the amount needed to keep that business running smoothly after you've purchased it. As soon as that business is yours, bills will be coming in for you to pay. So buyers should make sure they have sufficient working capital, either in cash or through a line of credit with their bank, to keep that business running smoothly. Once you've decided you're interested in purchasing a business, you and the seller may start with a letter of intent setting forth the material terms of your deal. The letter of intent can be either binding or non-binding. Or you can skip the letter of intent phase and start right with the purchase agreement. But when purchasing an existing business, you and the seller must first agree whether the purchase will be of the company that owns the business or whether the purchase will be solely of the assets owned by the company. In short, you need to decide whether it will be a stock sale or an asset sale. Now, the general rule of thumb is sellers like to sell stock and buyers like to buy assets. Sellers like to sell stock because it results in a capital gains tax consequence to them, as opposed to an ordinary income tax consequence. And in general, capital gains taxes are lower than ordinary income taxes, so sellers, like everyone else, like lower taxes. Also, the sale of stock transfers, when you're selling all the stock in the company, you're transferring all the liabilities in the company to the buyer, and sellers like to relieve themselves of the liabilities. Buyers, on the other hand, they like to buy assets instead of stock. Well, first of all, buyers don't want to buy liabilities, they just want to buy the assets. And that's what they can accomplish through an asset sale. But also, in a stock sale, the buyer doesn't get any tax advantages. But in an asset sale, the buyer will get some. The buyer has three goals. One, minimize basis in the seller's assets, maximize depreciation and amortization, and minimize gain on the subsequent sale or disposition. So in an asset sale, the buyer gets a step up in basis of the seller's assets. In a stock sale, the buyer doesn't. The buyer acquires what's called carryover basis in the company's assets. And by the way, that could be very low if the assets have been substantially depreciated by that company. So this would create a large and latent tax consequence to the buyer of these assets through a stock sale. But in an asset sale, the buyer gets a fresh start on depreciation and amortization of the assets acquired and can start immediately taking depreciation and amortization deductions. The more deductions against income, the more cash will be left in the buyer's hands. In an asset sale, the buyer will recover the purchase price of the business through sales of inventory and depreciation and amortization deductions. The goal is to recover the purchase price sooner rather than later, and that's what can be accomplished for the buyer in an asset sale. Well, there are many things to consider when structuring the acquisition of the business. The one thing to remember is the general rule of thumb: sellers like to sell stock and buyers like to buy assets. Well, Scaringi Law is involved in many sales and acquisitions of small and medium-sized businesses here in Pennsylvania. If you're a potential seller or buyer of a business, feel free to give us a call at 717-657-7770. That's about all the time we have today for the Scaringi Law Lunch Break. Thanks for listening and enjoy your lunch.